Is it the perfect time to invest in gold? What will happen in the future? How does China manipulate the price of gold? The Chinese are the culprits for the price being at historic highs. This is how China manipulates the price of gold. We'll show you how they do it, why they do it, and the trends for the coming years. Believe it or not, today an ounce of gold, 28 grams, costs $2,358.49. In 1 year, its price has increased by 12%. Imagine having invested in gold a year ago. We would be rich today if we had known before, right? The key question is, why is the price rising so much? The answer lies solely with China. The Asian country is accumulating tons and tons of gold. As demand skyrockets, so do prices. This is how the famous law of supply and demand works. Experts' theories have been shattered. Their main theory was that banks were buying gold to have reserves in anticipation of an imminent economic recession. But this theory has completely faded away. So what is happening? To put it in context, China is the world's leading gold producer. In 2023, it produced 375 metric tons of gold, which equates to 10% of global production. It seems like a giant amount, right? Well, China doesn't think so. The Asian country is not satisfied, and the People's Bank of China imported 2,000 tons of gold from other countries in 2023, and the forecasts for 2024 are exactly the same. But why do they want so much gold? That's what we all wonder. It seems that the behavior of the central bank sets the trend among its inhabitants. Although there are no official figures, experts estimate that Chinese citizens have bought more than 1,000 tons of gold for their homes. They're crazy. Why do the Chinese want 1,000 tons of gold in their homes? Are they going to make a gold bathroom? To understand the reason behind this behavior, we have to go back a few years. China has been a country that has developed in giant strides in recent decades. Its annual growth exceeded 10%, while the average for developed countries was between 2% and 3%. But this situation is changing. Its economy is developing less each year. This is common in developed countries. The effects became visible at the beginning of the year when something devastating happened. The shares of Chinese companies plummeted. They weren't the only investments that faded away. The profitability of investments in land and real estate also decreased significantly. So what do the Chinese do with the savings they no longer invest in stocks and real estate? They invested in gold. It has been proven that as the volume of trading in Chinese stocks decreases, the purchase of gold increases. Both markets are directly related. So is it time to invest in gold? Although it is not certain what will happen in the future, the answer is clear. It can serve as a short-term investment, but not a long-term one. When the Chinese economy stabilizes fully, the volume of stock trading will increase, and that of gold will decrease, causing its price to drop. If you want to invest in gold, you have to be attentive to the movements of both markets and study the operation in the short term.